In today's podcast, we'll be looking at the issue of financial innovation in the Caribbean. More specifically, we'll be examining the concept of mobile wallets or digital wallets and the emergence of this trend across several Caribbean countries. So let's get into it.
The Caribbean region is no stranger to financial innovation. Indeed, in the area of digital cash, both the Central Bank of the Bahamas and the Eastern Caribbean Central Bank played pioneering roles in both the establishment as well as the issuance of central bank digital currencies, or CBDC as they are commonly called. In October 2020, the Bahamian Central Bank launched the Sand Dollar, becoming the very first central bank in the world to issue a digital currency. The Eastern Caribbean Central Bank followed closely on their heels with its own version of digital currency, which was called Dcash, and which was issued in March 2021. However, not everything that glitters is gold, and sometimes, even oftentimes, being the very first brings with it significant challenges. Citing limited perceived advantages over existing payment systems, as well as public concerns about privacy, both of these experiments, the Sand Dollar and the Dcash, has since fizzled out due to extremely low adoption rates in the respective jurisdictions. Today, however, the current wave of financial innovation in the Caribbean, or some might even say the current craze with financial innovation, revolves around something called mobile wallet. It seems that not a day now passes without a new entity announcing that it has either just gotten regulatory approval for its mobile wallet or conducting a pilot project in anticipation of the launch of its wallet. So let's take a quick snapshot of what is happening across the Caribbean today in the digital space. Today, Jamaica has 3 mobile wallet providers. Lynx, which is associated with the National Commercial Bank. JNP, which is affiliated with JN Bank. And MyCash, which is affiliated with Digicel, a mobile service provider in Jamaica. In the case of Trinidad and Tobago, there are currently 2 providers, Encash, which is an affiliate of Republic Bank, one of the largest banks in the Caribbean, and WePay. However, also in the case of Trinidad and Tobago, the regulator has also granted license to Peshcash, PayPR, Paywise, and Wam Money. In the case of Barbados, they currently host 2 mobile wallet providers, M-Money and With It. Belize features 3 mobile wallet providers, eCash, which was a launch in affiliation with the Belize Bank, the largest bank in Belize, DigiWallet, which is a mobile service provider, and NBB Pay, which is associated with the National Bank of Belize. The Bahamas has 2 providers, OmniPay and Suncash. To add to these, there are a plethora of other mobile wallet providers spread throughout the Eastern Caribbean Currency Union. It is truly a tapestry of mobile wallet providers throughout the region. So what are mobile wallets and how do they work? Will mobile wallets bring about meaningful change to the financial landscape of the Caribbean? Can mobile wallets compete with the existing product offering of the more established payment service providers and banks? These are all topics which we'll be covering in today's podcast. So let's just get into it. In order to fully understand the current interest in mobile wallets today, we need to throw our minds back to 2007. Why 2007? Well, the whole concept of mobile wallets and the role which they can play in evolving the financial ecosystem really began in 2007 when Safaricom, Kenya's largest mobile provider, introduced a simple yet revolutionary product called M-PESA. M-PESA was a mobile banking service that enabled users to store and to transfer money using their mobile phones. It was the first time that this was done in a developing world. The concept was revolutionary because it used SMS text messages to conduct basic banking and payment transactions rather than having to rely on either physical banks or internet access. In order to complete a transaction, two parties simply need to exchange phone numbers, which would then allow them to transfer funds from one party to the other. The mass adoption of M-PESA by the average Kenyan meant that in Kenya, which was traditionally a cash-heavy economy, small shopkeepers, farmers, cab drivers, and their customers no longer needed to walk around with large wads of cash to conduct basic transactions. They could now simply use their phone to do so. Today, M-PESA can be found across 8 African countries. There are over 66 million active users of the wallet, and M-PESA contributes approximately 43% of the revenues of Safaricom, which in itself is $1 billion company. In other words, if you wanted a poster child for a success story in financial innovation in Africa, or in the entire world for that matter, it would be hard to find a better example than the M-PESA story. It has been highly successful in integrating, democratizing, and improving the overall financial landscape of East Africa. So what are mobile wallets and what do they actually do? A mobile wallet, which is also sometimes called a digital wallet or an e-wallet, they are all the same, is a software application on a smartphone or other digital device that allows the user to store, send, and receive money electronically. It often replaces the need for physical cash, debit cards, or credit cards. Some mobile wallets even allow its users to store other digital assets, such as loyalty points. While there are several functions and services that the user of a mobile wallet can carry out, there are perhaps 4 basic functions which are commonly used and which are indispensable to a successful mobile wallet. The first is peer-to-peer or P2P transfers, which simply means that the owner of the wallet can, using the phone, electronically send money to third parties or receive payments from others directly into their wallet stored on their phone. The second basic function which a user can carry out using their wallet is a payment for goods and services. This is usually done by simply scanning a QR code generated by the wallet on the phone to a point of sale application at the cash register of the merchant that they're dealing with, that the user is dealing with. This is very similar and almost identical to what obtains currently when we tap our credit card or debit card to pay for goods and services at a supermarket or store. The third key function which a mobile wallet affords is what is commonly called cash-in and cash-out transactions. This simply means that the owner of the wallet can go to a designated store or agent and either deposit physical cash, which he can request to be converted into digital cash and then uploaded onto his wallet, This is quite similar to what happens when we purchase a phone card, or in reverse, have the merchant convert digital cash, which is presently stored in his mobile wallet, into physical cash. In that instance, the balance of the digital cash on his phone will be reduced, commensurate with the physical cash that he cashes out. The fourth function of the wallet should be quite obvious. The mobile wallet can also hold funds digitally without the need for a traditional bank account. Indeed, some, if not all, mobile wallet applications allows the user to move money seamlessly from their mobile wallet to their traditional bank account, or vice versa. Now that we have a much better appreciation of what mobile wallets are and for what they actually can do, the question that naturally arises are these. Are the products and services being offered by mobile wallets truly revolutionary? Or are they simply shiny new ways of doing what banks have traditionally done and currently offer us? Can mobile wallets effectively compete with traditional banking services in the Caribbean? Ultimately, the question that we need to address our minds to is, can the M-PESA success story be replicated by mobile wallet providers in the Caribbean, if even on a smaller and a less grand scale? So what were the critical success factors behind the M-PESA model? I think it would be important to understand this before we delve into the question of whether or not the critical success factors are there in the Caribbean for a successful mobile wallet launch. Well, M-PESA's success in East Africa was neither accidental nor was it coincidental. M-PESA's success was a direct result of several key drivers working together, both technological and socioeconomic. Apart from the technological simplicity of the actual application itself and a very supportive regulatory environment, the M-PESA case study highlights the following key factors. Firstly, there was an extremely high mobile penetration rate in Kenya in 2007 when M-PESA launched its application. Simultaneously with this high mobile penetration rate, there was also a very low banking penetration rate, along with a high demand for financial services. In 2007, when M-PESA was first launched in Kenya, there were less than 28% of the population which had access to formal banking services. This meant that there was a strong high demand at the time for safe, fast, and affordable ways to transfer money, especially as it related to remittances, and especially with regard to moving money from urban areas to rural areas. Also, since a critical mass of users adopted M-PESA very early, it became socially valuable. In other words, people use M-PESA because their family, friends, and businesses were already on the platform. Perhaps, however, the most critical key driver in M-PESA's ultimate success was its affordability and the transparency of its pricing. M-PESA's fees were relatively low and predictable, especially when it was compared to traditional banking or informal money transfer services. This meant that it encouraged small transactions, which was very typical in rural economies. So where does this leave us? Where does all of this leave us? Like M-PESA, in order for mobile wallets in the Caribbean to significantly impact the financial landscape, there must also be, first and foremost, a compelling value proposition. And again, like M-PESA, they must be able to answer the following questions. Can mobile wallet providers provide their services cheaper and more efficiently than the existing players? Are they able to provide products and services not currently being offered? Can they reach underserved population? And finally, can they promote financial inclusion? So let us examine each of these points in turn as they relate to the Caribbean region. The average Caribbean citizen today who currently has a banking relationship is also more than likely to possess a credit card as well as a debit card. I don't know of anyone who I interact with who does not have either of these. For those who have phones or mobile devices, they'd also be served by and possess online access and banking apps, allowing them to make online purchases, pay bills, and transfer funds seamlessly, either using ACH or RTGS technology, depending on the quantum of the funds involved. Against this background, therefore, there is very, very little by way of new services that a mobile wallet application can provide to citizens across the Caribbean. With respect to pricing, the pricing of their services, when compared to mobile wallets, banks currently enjoy economies of scale, which allows them tremendous leeway to offer lower costs for their products and services. Even if mobile wallet providers were to subsidize their services to attract users, this is not a sustainable long-term success. This cannot be continued on a long-term basis. In any event, there's currently little evidence to suggest that the services being provided by the regional mobile wallet providers are actually cheaper than those currently being offered by the traditional financial service providers. M-PESA's success also in large part relied upon a large network of agents to facilitate and to handle cash-in and cash-out transactions. To replicate this, Caribbean mobile service providers would need to solicit merchants willing to hold large amounts of physical cash on their premises. This, of course, is a highly unattractive proposition given the current crime concerns across the entire region. So where does this all leave us? Well, mobile wallets are clearly not offering services that banks cannot already provide. Their core structure are unlikely to be cheaper than existing providers, and building an agent network will be both challenging, risky, and expensive. There's, however, yet one question to be answered, and it is this. Are there currently underserved or financially excluded populations in the Caribbean that mobile service providers can target? According to the most recent data available, 77% of Jamaican adults have active bank accounts. For Barbados, the figure is approximately 100, And in the case of Trinidad and Tobago, the Bahamas, and the OECS, the figures are respectively 81%, 94%, and 86%. So for all intents and purposes, the Caribbean region seems to be extremely well penetrated when it comes to the provision of financial services. It is only in the case of Belize where the banking penetration rate is 66%, and which has a large unbanked migrant labor force. Is the question of financial inclusion a pressing or even a significant one? So let's see if we could summarize and pull everything that we've been saying together into a nutshell. Let's see whether or not we've made a case for mobile wallets, or whether or not it is going to be difficult for mobile wallets to penetrate an already overcrowded market in the region. The story of M-PESA mobile wallet teaches us that innovation thrives when it solves everyday problems, and especially where there's a real need. Against this background, and from all indications, mobile wallet providers in the Caribbean face and will face an uphill battle. They are not offering currently services that banks don't already provide. Their pricing advantage is minimal, if at all. Replicating an M-PESA style network of agents seems highly unrealistic for now and highly expensive. Except in the case of Belize, where the banking penetration rate is low compared to its Caribbean neighbors, and where there's also a significant unbanked migrant population from Central America. The Caribbean region seems to be extremely well served by its current range of financial service providers. So, I leave it to you. Is there a case for mobile service providers in the Caribbean? Something to think about. A word to the wise.